Hi everyone. We would be starting in another 2 minutes. So good afternoon, good evening everyone, and welcome to this second session on the UAE Corporate Tax FAQs. So this is a part of our series on the webinars relating to UAE Corporate Tax. And the idea behind this webinar is we keep on discussing the various frequently asked questions which are there regarding to the UAE Corporate Tax as issued by the UAE government, and then look at how the practical implications of these are going to work around, as well as the fact that how these might be relevant to each one of you. So we are moving in sets in one by one, and we covered some 25 MCQs in the last session, and we will be looking at covering at least that number in this session also. We actually had certain cases where people were not able to keep a track of the past webinars which are there, which we've been conducting, and even the future ones that are online. So let's say we have an international tax webinar next week relating to the concept of Article 4 resident. So now we've incorporated all of that as a part of this particular community. So if you just want to stay updated in terms of the past events, get the links in terms of where they are, and whatever future upcoming events are there in terms of the live webinars. The recorded and the other stuff is something different. I'm talking more about the live webinars that we're conducting. You can feel free to join our community, which is the link is given over here. But since this might take you to the section where the detailed things are available, the course and curriculum, which is after a paywall, we will look at how you can stay updated on each of these sections by just simply following a 2-minute process that we will take you through as we move through the presentation. So let's start with the FAQs for today. And the first set of FAQs is relating to the natural persons. So the question that comes up is, what exactly is a natural person under the UAE Corporate Tax Law? Now, we discussed last time in the proceedings section that the natural person are not liable to UAE corporate tax. It doesn't matter whether they are a resident individual or they are a non-resident individual, unless they are carrying on a business activity in the UAE. Now, once you carry on a business activity in the UAE, it doesn't matter whether you earn income from a local customer in UAE or a foreign customer. If the business activity is done in the UAE, then assuming you are above a particular threshold, which we are going to discuss in the subsequent slides, you are liable to pay UAE corporate tax only on the business income. Other income like salaries, wages, personal investment, rental income, which is not a business per se, they are all exempt from UAE corporate tax. So the first question is, who exactly is a natural person or an individual? Under the UAE corporate tax law, an individual is someone who's a natural person. So basically, it could be A, B, C. These could be resident, they could be non-resident. It doesn't matter. If they are natural persons, someone like you and me, right, they will be covered for taxation under the UAE corporate tax law. Now, it will be interesting to see that we are all moving towards the age of artificial intelligence, and we may have a point in time where basically There might be AI-driven robots or someone who are doing those things. That's again one of the areas which is being discussed in the international taxation circle as to how those people are going to get taxed. So if there's a bot who's running a business because of his artificial intelligence or a particular activity because of what they are performing, if they get income from it, how that income is going to be taxed is something which is again a matter of research. There are a lot of papers which are now happening on these things, a lot of debate and discussion. But coming back to the UAE corporate tax law, what it means is that if it's a natural person, they will be considered only if it's an individual. Will such a natural person be subjected to UAE corporate tax? And the answer to that is a natural person will be subjected to UAE corporate tax provided the annual turnover of the business that such a non-resident is carrying out exceeds AED 1 million, is broadly around 2.2 crores in terms of the Indian numbers, and maybe around $350,000 from a business or business activity in the UAE. So what is important is that the business activity should be conducted in the UAE. And if this business activity is conducted in the UAE and the annual turnover from such a business activity exceeds AED 1 million, then a natural person will be subjected to UAE corporate tax. What is the meaning of business or business activity for which 1 million limit is applicable? So it could be any business, any activity which is generating a revenue for the customer, but as long as the revenue is from a business activity, it is covered. Now, what is business activity? That we will see in the subsequent FAQs. But the following income, that is an employment income, personal investment income, and real estate investment income, is something which is not considered as a part of the business activity. So if an individual who's a resident or a non-resident derives employment income, that is not something which is a part of the turnover. If it's in personal investment income, which could be in the form of interest, dividend, or other income, they are not going to be considered as a business activity unless there's an exception to this, which is that if the activity of carrying on investment requires a license from the relevant authority. Now, whether you obtain a license or not is a different matter, but if you're conducting an activity of investing through which you are earning income and this activity requires a license from the UAE government, then it will not be considered as a personal investment income. Similarly, a real estate investment income done in personal capacity, so if you derive rents, that is not going to be considered as a taxable income. However, if this rental income is conducted in such a manner that it requires a license to carry out such an activity in the UAE, in that case, such an act will be something which will be covered as a business activity, and therefore the turnover will be included in computing the 1 million limit. In case there are any questions that you have, you can keep on asking them simultaneously, and we will keep on taking them one by one. So does a natural person's citizenship or visa status have an impact on their tax status? So if you are a resident of UAE or a non-resident of UAE, if you're a citizen of a country which is not UAE, some other country, would that impact your taxability? The answer is no. The citizenship or the visa status does not impact the taxability. You may be a citizen of UAE or outside UAE. You may be a resident visa holder of UAE or otherwise. So long as you are carrying out a business activity in the UAE and the turnover from such a business activity exceeds 1 million, then regardless of your citizenship or visa status, you will be considered for taxation accordingly. Is it now better? I mean, is the echo still coming or is it sorted? Okay. Okay, so I think it is fine now. We'll just move ahead with this. The next question is, will natural person be taxed on the business income which is earned outside of the UAE? So let's say there's an individual who's in the UAE and he earns income from transacting with customer A who is in UAE and customer B who happens to be outside UAE. The question is, will income earned from B be liable to UAE corporate tax? And the answer to that is, if the business activity is conducted in the UAE. So let's say if he's into service business, the people who are providing services are in the UAE, or if these people are outside, but they are controlled and guided by people in the UAE, then it will be attributable to the business activity in the UAE. Even if it is earned from a customer outside UAE, it will still be taxable in the UAE. Now, what if an individual is conducting two businesses? So let's say one is of trading and the other one is of service. Let's say the revenue from trading is 500,000 dirhams and service is 800,000 dirhams. So individually, these are less than a million, but together they are 1.3 million in terms of the number. When we talk about the calculation of the limit for business or business activity, the aggregate of all businesses and business activity needs to be considered to determine whether the threshold of AED 1 million is met or otherwise. So if you carry out two activities, the same individual, you need to aggregate the revenue from these two to see whether the AED 1 million annual threshold is something which has been met or which is something missing. This question, I think we've already taken, that will a natural person's employment income be subject to UAE corporate tax? The answer is no. So we'll skip some of these questions to go to the ones where there might be a more discussion that might be required. So like I mentioned, here is basically the link of the community. In case any of you is interested, you can just click and join this community. The second is, will an income earned by a natural person from bank deposits be subjected to UAE corporate tax? Interest income on bank deposit or savings income earned by them in the personal capacity. So if you are not into the business, but this is an investment of your personal saving, then such interest income will not be liable to UAE corporate tax. What do you mean by personal investment income? It includes any income which is in the form of interest, dividend. However, it excludes any income from businesses or from any activity which is conducted or required to be conducted through a license. So what is the difference between these two? The difference between these two is that if you are actually having a license to conduct an activity and that activity results in interest income or dividend income, then it will not be considered as personal investment income and therefore will be liable to UAE corporate tax. Second situation could be you don't have a license, but under the law, you are required to obtain a license. Even in such a case, even though you don't have a license, this income will not be considered as a personal investment income. What is the definition of a real estate investment? It is any income which is earned from the investment activity related directly or indirectly to either land or real estate property, which is in the UAE. So this land or real estate property should be in the UAE, which is conducted or required to be conducted through a license issued by the licensing authority in the UAE. Right? So if to carry out this real estate activity, you need a license and you have it, or if you're required to obtain a license, but you don't have it, in both these cases also, you will be less subjected to UAE corporate tax. The next FAQ is, if a natural person owns several commercial properties in their name and generates a rental income above AED 1 million, will such activities still qualify for exclusion for corporate tax purposes? Now, in this particular case, this activity will qualify for exclusion as long as this individual is not required to obtain a license and does not have a license to carry out this activity, right? It doesn't matter whether the revenue is above 1 million or less than 1 million. The test is, are you required to obtain a license to do this activity, or you are actually doing this activity through a license? In either of these two cases, if the revenue is above AED 1 million, then only this is applicable. But if you are not falling under either of these two provisions, then you are not required to register for corporate tax. Can a natural person elect for the application of small business relief? Now, just to step back a little bit, small business relief is available to certain businesses for a period of 3 years, where in their cases, none of the years the revenue exceeds AED 3 million. In those cases, even if they have a taxable income, they do not have to pay any taxes. So the question is, can a natural person elect for the application of a small business relief? And the answer is yes. A natural person who is subjected to corporate tax can elect to the application of the small business relief, provided they meet the conditions which are decided in the ministerial decision number 73. So if we try to summarize what we had in some of the preceding questions is, if your revenue is between zero, so let's say we are talking about a natural person. If the revenue is between 0 and 1 million AED, then they are not subjected to corporate tax. If the revenue is between 0 to 3 million dirhams, a natural person can still claim the small business relief, provided it meets the relevant condition. But this is only for a period of 3 years, a maximum period of 3 years, right? After that, this is not available. If this limit continues, then you can still claim the benefit under this clause. Let's look at this particular second segment where, let's say there is a foreign company and there is a natural person in the UAE. This set of FAQs deal with the situation as to when the presence of such a natural person be considered as a permanent establishment for the foreign company, right? But there are certain exceptions, and those are the exceptions which are covered in this set of FAQs. What if an employee of a foreign employer works in UAE under a virtual work residence visa? Will this create a UAE PE for the foreign employee? So in this particular case, what is being said is that if a person is under a virtual work residence visa, can the foreign company still have a permanent establishment in the UAE? Now, in this particular case, what is important is what are the activities which are conducted by the employee. As long as the activity performed by the employee in the UAE are not part of the core income generating activity of the foreign employer or its related parties. So let's say this company is into, so let's say this foreign company is into the business of providing tax services. And this individual comes in the UAE and is providing tax services to the foreign company, to the local clients in UAE. Then what this employee is doing is he's providing the core services of the non-resident in the UAE, right? In that case, this employee can be treated as a permanent establishment. However, he would not create a PE if the activities he does is that of non-core nature, right? So if he just comes here to recruit certain employees who would then go back and work with the foreign company in their jurisdiction, then this is not a core income generating activity because the business of the foreign company is providing tax services. The second situation is if this foreign company had another related party whose core income generating activity was recruiting people for its client. Now, if this person is doing recruitment activity on behalf of a related party of the foreign company, And this activity of recruiting employee is the core income generating of the related party. Even then, this can result into a permanent establishment, right? And the second condition is one, he should not, if you want that there should be no PE, one, he should not be carrying out the core income generating activity. And two, the foreign employer should not derive any income from the UAE, right? Now, before moving to the next section, if there are any questions, you can leave them in the comment section. For a minute, even I would look at, so there are no questions actually in the chat box as of now. In case there are any questions, you just feel free to write them down over here. And I'll be happy to answer them in the next few minutes. Okay, since there are no questions, I will go back to the presentation. So what is a juridical person? Under the UAE corporate tax law, a juridical person is an entity which is established or otherwise recognized under the laws and regulation of the UAE or under the laws of the foreign jurisdiction, which has a separate legal personality from its founders, owners, and directors. Examples of such company will include a limited liability company in the UAE, a foundation, an onshore trust, a public or a private sector company, or other entities. UAE branches of a domestic or a foreign juridical person are regarded as an extension of their parent or head office and therefore are not considered as separate juridical person. Now, this is important because let's say you have a foreign company and we are dealing with a practical case like this, which has 3 branches in the UAE. The question was, are these 3 branches required to obtain separate registration, or the foreign company can just obtain a single registration and that should be sufficient? The answer is the foreign company can be obtaining a single registration and that should suffice for this purpose. No need to obtain 3 simple separate registrations. The same thing is also going to apply if there's a domestic company which has more than 1 branch. All these branches and the domestic company can together file for a single tax registration and file a single corporate tax return. What does it mean to have a separate legal personality? It's a simple corporate law concept, which means that the entity has the right to enter into transaction on its own. It has its own obligation and liability for good or bad thing that it does, right? Generally, a juridical person would be having a limited liability when it comes to the debt and obligations of such entity. Now, in order to stay updated with our events and all, I would just take you through a small process. And I would suggest if even you can do this process alongside with me, because basically, so you come to the LinkedIn page where this event is going live. And in the comment section, if you see the second comment, you can click on this second comment, which is the tiny URL thing. Once you click on this, you can create an account on our community. You just mention your name and your last name. You can mention your email ID. Choose a password that you might want to use and create an account. It just takes a minute and it will be much more useful for you to access all the earlier webinars that we have done, as well as stay updated on the future webinars that we are doing. So once you register on this, you can go to the announcement and update section here on this particular picture. And then you can get access to all the webinars that we have done. So we had performed a webinar on penalties and timelines for delayed registration under UAE corporate tax law. You get the link to this webinar over here. Then we had conducted the UAE FAQ series, the current webinar that we are doing, which is available here. So you just get to see all the links of all the webinars that were conducted earlier. This is the next webinar that we are conducting on international tax. Now, because international tax is also equally applicable and important from a UAE corporate tax standpoint, this webinar will be dealing with, this is the first session on international tax, deals with the concept of residence, which is basically Article 4. And this is going to be quite important from a UAE standpoint also, because UAE corporate tax has the concept of deemed UAE resident. So let's say if a foreign company is controlled and managed by shareholders sitting in the UAE, then such a foreign company can be treated as a resident of UAE. Now, if UAE also has a tax treaty with that other country where that company lies, one can see whether the beneficial provision of Article 4 might actually allocate the residential status of this company to the foreign jurisdiction, and thereby reducing your entire tax liability in UAE. This is the link for the third session that we will be carrying out on the taxation of free zones. So this is the third session on the UAE Corporate Tax FAQ series. And this will be on the taxation of free zones, UAE branches, in case we are not able to complete it today, and the taxation of non-resident. So here's the link where you can go and register. And in any case, if you are part of this particular community, then you will be able to get these updates on a regular basis on your inbox. Again, the presentation that we are presenting today and the presentation which we did in the earlier session, they are also available in this particular case for download over here. From the featured section, you can easily figure out what events are going on and what are going to be there in the future. And this registration just takes a minute. So for those of you who would like, you can just register it here. We've got various communities where detailed things are available in terms of, the complete UAE corporate tax course, article wise, the concept wise, then all the resources, FTA guides, the presentations that we have. You have a section where you can ask questions from your other colleagues. Then you get a daily poll and short videos, but that is obviously a separate section. This announcement and update section is what I would want you to kind of just have a look at and join it so that you can get the links for the previous webinars and the ones that are upcoming. Now, coming back to our presentation and the FAQs which are there. So how do you determine whether a jurisdictional person has a business within the meaning of UAE corporate tax? Now, we saw in the case of an individual that only the income relating to business or business activity is liable to UAE corporate tax. But that is not the case in case of a company. For company, all the activities which are undertaken by a juridical person will be deemed business activities and are within the scope of UAE corporate tax unless specifically exempted. So let's say if you are earning business income, it is taxable unless you are a qualifying free zone company and the income that you are getting is a qualifying income not liable to UAE corporate tax. If you are an exempt entity, your income will be considered as business income, but because you have exemption, it might not be taxed. If you're a UAE company deriving, let's say, dividend income from a foreign company, then you need to see whether you meet the condition relating to participation exemption and claim exemption on those income. So to summarize, all income from business activity will be liable to UAE corporate tax. If there are exemptions because of the form of the organization, that is a qualifying free zone company or otherwise, or because the organization is exempt, you can claim an exemption accordingly. Are foreign juridical person subjected to UAE corporate tax in the same way as a UAE resident person? So here there are two types of foreign person that I would like to bring in. One is the one who's deemed as a UAE resident, right? If these are deemed as UAE resident because they are effectively managed and controlled in the UAE, then they are liable to UAE corporate tax just like the way the resident are, because this company will be treated as a resident entity, right? But if the foreign company is not effectively managed and controlled in the UAE, they will not be treated in the same way for taxation as a UAE resident. In their case, you will need to see if they have a permanent establishment, the income attributable to the PE will be liable to UAE corporate tax. If they have a nexus in the UAE, income attributable to this nexus will be liable to UAE corporate tax. But if they have any other form of income which is not related to nexus or PE, typically referred to as the state sourced income, which is also not related to either of these two, that may not be liable to UAE corporate tax. When is a foreign juridical person considered effectively managed and controlled in the UAE? Now, this would happen on a case-to-case basis. So there could not be a standard set of guideline or a yes-no kind of a situation that is applied. What you need to see is what is the location where the key decision makers, such as directors, make strategic decisions affecting the juridical person. So two important sub-points of this particular FAQ. First is you need to see the location of the key decision makers. Are they in the UAE? Are they outside the UAE? The second is, where are they taking the strategic decision? Note the stress is on strategic decisions, right? So if the directors are in UAE taking strategic decisions in the UAE, then such a foreign company will be treated as a UAE resident. If their directors are outside UAE taking strategic decisions outside UAE, then this will be not considered in the similar manner. But the conditions get complicated when some directors are in UAE, some are outside UAE, some may be taking strategic decisions, some may be taking normal admin decision. So in those cases, you need to do a bit more work in terms of the exercise to see whether or not this is going to be considered for UAE corporate tax. Will UAE holding companies be subjected to UAE corporate tax? Of course, they will be considered for corporate tax, but any dividend that they receive from domestic shareholdings will be exempt without condition. So if one UAE company pays dividend to a UAE holding company, it will be exempt in the hands of the holding company without any condition. And dividend from foreign shareholding and capital gain from domestic and foreign shareholding will be exempt, subject to meeting the participation exemption condition. We'll look at what participation exemption is. But to simplify this in terms of a diagram, if you receive dividend from a domestic company, exempt without condition. If it is from a foreign company, the PE condition needs to be met. If you get capital gain income, whether from a domestic company or a foreign company, in both these cases, the PE condition has to be satisfied. Let's look at a few more questions, FAQs around partnership. Any questions that you have? Interestingly, this time around, we have the number of questions that we're getting is quite low. Please feel free to ask any questions that you may have. Okay. So how does the UAE corporate tax law applies to partnership? For this purposes, partnerships are divided into two parts. One is the unincorporated partnership and the other is the incorporated partnership. Let's talk about incorporated partnership because that's the simpler one, right? So incorporated partnerships are the ones where, it could be an LLP, a partnership limited by shares, or other type of partnership where none of the partners have unlimited liability. These partnerships will be subjected to corporate tax in the same manner as a corporate entity. The problem comes in when you have an unincorporated partnership. I would not say a problem comes in. The detail needs to be seen when you have an unincorporated partnership. These are basically contractual relationships between two or more persons, right? Instead of being a different juridical person separate from partners and members. So let's say, for example, let's take a case where A and B are partners in a LLP. In this case, the liability of A and B is limited. This entity is a separate entity. So in those cases, the LLP will be liable to corporate tax just like a company. But if A and B, let's say not A and B, C and D are two people, they verbally agree that let's work together and do some work, right? So effectively, it's a verbal agreement, may not be necessarily in writing. And whatever profits and losses come, those we are going to share. And there's no separate, distinct personality of this entity. This will be an unincorporated partnership, right? These unincorporated partnerships are treated as transparent for UAE corporate tax purpose. What does this mean? This basically means that the income earned by the unincorporated partnership will be taxed in the hands of the partner, right? Instead, each partner is subjected to UAE corporate tax on their share of income from the business conducted through the partnership. So the next question is a written contract required to form an unincorporated partnership? And the answer is no. There's no requirement to have a written contract, even a verbal agreement, or the conduct of the parties that they want to work together as a partners will give rise to unincorporated partnerships. Are unincorporated partnerships subjected to UAE corporate tax? In normal circumstances, the income of the unincorporated partnership will be taxed in the hands of the partners. So let's say if they earn 3 million worth of profit and both of them are doing equal shares, 1.5 million and 1.5 million, they need to pay taxes on this income in their own hands. However, there can be a situation where the unincorporated partnership can make an application to be treated as a taxable person, right? If this UIP makes an application to be treated as a taxable person, then this UIP will pay tax on income, and whatever remains will get distributed to the partners. So how is the taxable income of partner in an unincorporated partnership calculated? So the income and the expenditure of the unincorporated partnership is allocated to each partner in proportion to their distributive share in unincorporated partnership. So let's say if an unincorporated partnership has a revenue of 10 million and expenses of 5 million and a net profit of 5 million. Let's say there are two partners, A and B, who are 60% and 40% distributive share partner. In such a case, 60% of the revenue, that is 6 million, will be allocated to A. 60% of the expense, that is 3 million, will be allocated to B. And 3 million will be considered as the taxable profit of A. Similarly, 40% of the revenue and 40% of the expenses will be considered in the hands of B. And the remaining, that is 2 million, will be considered as taxable profit of B. If such a distributive share cannot be identified, it will be allocated in the manner which will be prescribed by the FTA. Is there a minimum or a maximum number of partners in an unincorporated partnership? The minimum number is 2, but there is no maximum number prescribed for partners in an unincorporated partnership. Can an unincorporated partnership apply to be treated as a taxable person? Definitely yes. Once this is done, they can make an application to the FTA, right? If such an application is approved, the profits will be taxed directly at the unincorporated partnership level rather than in the hands of the partners. The application shall be irrevocable except under exceptional circumstances and subject to the approval of the FTA. Now, for those of you who want to understand and learn UAE corporate tax, you can also subscribe to our UAE corporate tax course. And the course contains all the articles which are available. It is accessible on Android and iOS. But if you just want to be a part of the community where you instead, in addition to learning the content, you also get a chance to interact with other people, then you can always join our community. Will each partner in an unincorporated partnership be required to register and file a UAE corporate tax return? So here the question is that in the preceding section, we saw that A and B had 60 and 40% stake, right? Are they both required to register separately and file a UAE corporate tax return? So basically the answer to this given in this FAQ number 144 is that both the partners are individually subject to UAE corporate tax on the share of income from unincorporated partnership, right? So accordingly, the natural person will be required to register for UAE corporate tax purposes and comply with the requirement of the law, right? If the UIP makes a separate application, then one of the partners in the unincorporated partnership will be appointed for responsibility for corporate tax return, right? In case, a juridical person, let's say there's a company and this company is a partner in an unincorporated partnership where such company is already registered, it will not have any additional corporate tax registration required. So if this company has obtained a corporate tax registration, just because it's a partner in a UIP, it doesn't need to obtain any additional requirement. It can just include the income from here while filing its own tax return. The next question is, what will be the treatment of foreign partnerships under the UAE corporate tax law? A foreign partnership, so let's say there are two partners in a foreign partnership. So let's say they own 60%, they own 40%. What will be the tax status of this foreign partnership? This foreign partnership will generally be considered as an unincorporated partnership, right? Irrespective of that, they are not subjected to tax in the relevant foreign jurisdiction. So a foreign partnership which is established in accordance with the foreign jurisdiction, right, can also be considered as an unincorporated partnership, whereas an unincorporated partnership which is established under the UAE corporate tax law is also considered as an unincorporated partnership, right? What is the impact of treating such a foreign partnership as an unincorporated partnership? The impact of this is, let's say there are two partners, A and B, who are partners in a foreign partnership. If this foreign partnership is considered as an unincorporated partnership, it will be treated as a transparent entity, and therefore the profits earned by this entity will be subjected to tax in the hands of the partners, that is A and B. But this is going to be subjected to the provisions of the relevant tax treaty, which may provide otherwise. Let's look at a few more FAQs around branches. So we will be done with this first segment of UAE corporate tax FAQs, and then we are going to pick up some of the main topics around free zones, permanent establishment, and etc. To ensure that you are able to get the notification for all these, I seriously suggest that you join the community and stay updated in terms of, it doesn't cost anything to access the announcement part of our community. So that will just give you an idea in terms of all the webinars that are happening. So FAQ 168 basically deals with, are UAE branches separate juridical persons? The answer is no. We discussed this earlier also today. The UAE branches of either a domestic company or a foreign juridical person are considered as an extension of the parent or the head office and are therefore not considered as separate juridical persons. Will income of the UAE branches of a UAE business be subjected to UAE corporate tax? Definitely. Such an income of UAE branch of another UAE company will be a taxable income and included in the corporate tax return of the UAE parent or the head office. Of course, if there are any exemptions which are available at an overall level, that is something that you need to consider. Are the UAE branches required to obtain separate registration or file separate tax return? The answer is no. They are neither required to separately register for UAE corporate tax, nor are they required to file a UAE corporate tax return separately from their parent entity. Will the income of foreign branches of a UAE business be subjected to UAE corporate tax? Here, basically, there are two choices which were given. If there is an income of a foreign branch or a foreign PE of a UAE business, it will be included in the taxable income of the UAE corporate tax return, unless the head office elects to claim an exemption for its foreign branch profit. So let's say there's a UAE company and it has a foreign branch. There are two things which are applicable here. Let's say the branch earns profit of 5 million AED and the head office earns a profit of 10 million AED. In case the branch has already paid taxes in the local jurisdiction, the head office can take this income in here and claim it as an exempt income, right? So it can elect to claim an exemption for the foreign branch profit, but the condition is that such profits should have already been subjected to tax in the foreign jurisdiction. If these are not subjected to tax in the foreign jurisdiction or are subjected to a lower rate of taxation, then it will be included as taxable income in the hands of the UAE entity. Of course, any taxes that might have been paid overseas will be available as a foreign tax credit, subject to whatever conditions might be applicable based on the facts of the case. Will branches of foreign businesses be subjected to UAE corporate tax? So let's say there's a foreign company. It has a branch in UAE. The question here is, will such branch be subjected to UAE corporate tax? A UAE branch of a foreign business will be subjected to corporate tax and is required to register for corporate tax purposes if the branch constitutes a PE in the UAE for the foreign business under the corporate tax law. This would normally happen when the branch is conducting any business activity which is not an auxiliary, preparatory, or minimal activity which is not subjected to UAE corporate tax. Will UAE branch constitute a taxable PE of the foreign business? Yes, definitely. That will happen unless the branch is conducting activities which is not considered as a permanent establishment. For this, you just need to go and see the relevant article, which is Article 14 PE, and the relevant tax treaty to see if a PE exists. What are preparatory and auxiliary activities? These are basically activities. So I think, I would take a pause here and ask if there are any questions, because this is one part which I just want to consider when we deal with the taxation of non-resident in the next session. So if there are any questions that you have for today, you can still please mark them over here. For those of you who haven't still registered, I would insist that if you can just go yourself and register again on this particular portal of our community, and by using the tiny URL, and then you can stay updated on all our sessions, download the relevant presentations which are available for our sessions, and then accordingly, we will be happy to have you in the next sessions. Any questions, please? Okay, since there are no questions, we will take an end to the session for today. In case you still have any questions, you feel free to write them in the comment section.